usstrategy.com.
Hi, this is Chris looking at the upcoming Tuesday, July 22nd trading session. As you can see, I have the economic calendar in front of you. And to kick off the day, we do have Stevens, RBA's governor in Australia, speaking. And anytime a central bank governor speaks, there is the probability that they may say something that moves the market. You also have the RBNZ, Deputy Governor Grant, a little less important, but could move the New Zealand dollar market or the New Zealand stock markets. As RBA's Stevens is speaking, that would be especially effective, or have an effect, I should say, on the Australian dollar in and of itself, probably the ASX as well. Later in the day, we have a little bit going on in Japan, but really nothing to get too excited about. The Swiss trade balance comes out. That, of course, will affect the SMI and the Swiss franc itself. Swiss exports, of course, this is a very localized type of effectiveness, so we really shouldn't see too much in the marketplace, but it could move the franc or the SMI. Public finances, GBP will show how much is going into the British economy as far as public movement is concerned, and net borrowing, public sector, of course, will tell us how much borrowing the UK is doing. Not a major market mover, but could have a localized effect as the Swiss announcements do. Really, by far, the bulk of the announcements during the day that are going to cause market moving events, possibly, is the CPI, ex food and energy, year over year for the month of June in the United States. You can see that they're counting on 2%. That's what it was last time. Shouldn't see much of a change. If we see a variation there, that could, of course, move the markets. CPI index with food and energy included, 2.1, 2.1. And then you've got the month over month. Those probably won't be as interesting. Pay attention to the existing home sales month over month in June, though. They're expecting 2%. Previously, it was 4.9. And the thing is, though, the housing market isn't a major focus at the moment, but it remains a sticking point. So a surprise there could, of course, have an effect on the U.S. indices and the risk appetite in general. Looking at the S&P 500, we fell during the bulk of the session on Monday, but found enough support below to form a hammer and continue the uptrending channel. I see nothing on this chart that suggests that it's going to be any different going forward. Dips should continue to offer buying opportunities, and the bulls seem to be firmly in charge of the S&P 500. The only sticking point is the 2000 level. We need to get above there for a longer term move, but between now and then, it should continue to grind higher every chance it gets. The dollar yen had a positive session on Monday, but that's not really a surprise. We were close to the 101 level. That is the massive support that we've had for some time. We go all the way up to 103 eventually, is the way this market's been moving most of the year. So quite frankly, not a big surprise, really not a whole lot out of the ordinary. I believe that this market will continue to go higher. It will be short-term in nature, expect a lot of volatility, but short-term traders should continue to really like this pair. Looking at the pound dollar, you can see we had another negative session, but we are starting to run up on a little bit of support here, right around 1.7050, and massive support at 1.70. So really, a hammer-like candle doesn't surprise me. I still am ultimately bullish. A break above 1.72 gets us to 1.75. We could see, continued kind of malaise at the moment as we try to base and go a little bit higher. No interest in selling this pair until we get below 169, which is something that I don't see happening anytime soon. And finally, over in the euro dollar pair, you can see that we did try to break higher initially during the session, turned around at 1.35 and a half, and now have formed a fairly neutral kind of block candle. We're at the bottom of the consolidation range, so I'm not looking to sell. We need to break to a fresh new low on a daily close for me to even consider selling. So at this point in time, I'm looking for buying opportunities. Short-term candles that tell me that the euro is going to pick up a little bit of muscle, perhaps taking short scalps, either through the binary options, of course, or possibly even spot forex, depending on how you trade. But either way, 136 will be targeted eventually, unless, of course, we break down. If we break down, then we go to 1.33, but that will take a little bit of time. And that has been a look at the upcoming Tuesday, July 22nd trading session.